Effective at midnight, we will impose a 25% tariff on all foreign-made automobiles. And starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. You're not so kind when you got ripped off with your salaries. My auto worker friends and my Teamster friends and all of the unions that typically voted Democrat, they're not voting Democrat anymore because worker, whether union or non-worker, they're for the Republicans now. That's what happened. But we will charge them approximately half of what they are and have been charging us. If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually. They're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough, great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46%, and much higher for certain items like cars, you know, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough. The Prime Minister just left, and he's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades, and it was only 7 years ago when I came in, we started with China and charged them. We took in hundreds of billions of dollars from China in tariffs. And they understood, honestly. President Xi understood. He said, look, I understand. And the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand. They're ripping us off, and they understood it. Prime Minister of Japan, Shinzo Abe. He was a fantastic man. He was unfortunately taken from us, assassination. But I went to him and I said, Shinzo, we have to do something. A trade is not fair. And he said, I know that, I know that. And he was a great gentleman. He was a fantastic man, but he understood immediately what I was talking about. I said, Shinzo, we have to do something. He said, I know that. And we worked out a deal, and it would have been a much better deal, but frankly, there were many years left on the deal that was made previous to my getting there, but it was something. If you look at Switzerland, 61% to 31%. Indonesia, Malaysia, Cambodia. Oh, look at Cambodia, 97%. We're going to bring it down to 49. They made a fortune with the United States of America. United Kingdom, 10%, and we'll go 10%. So we'll do the same thing. South Africa, 60%, 30%, and they've got some bad things going on in South Africa. You know, we're paying them billions of dollars, and we cut the funding because a lot of bad things are happening in South Africa. The fake news ought to be looking at it. They don't want to report it. Brazil, 10%, 10%. Bangladesh is 74%. So you see what's going on. Pakistan, 58%. Sri Lanka, 88%. So what we're doing is we're taking not the full, we could take the full 88%. Thanks a lot, Howard. He's doing a very good job. How's he doing, all right? At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart? And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of bad things happening at the gate because the money is so enormous that you're talking about. There's never been probably anything like it in terms of the enormity, and there are a lot of bad things happen at the people that do the check-in, and they're looking at 10-year jail sentences if they do play. We're going to treat them so good, but if they cheat, the repercussions are going to be extremely strong.
And so, starting very soon, he is getting ready to impose tariffs on foreign cars and parts, 25% from anywhere. And then he's also announcing 10% at least tariffs on all countries. And then what he calls the worst offenders, the bigger tariffs, they're going to be 34% for China, India 26%, Japan 24%, the EU 20%, Taiwan 32%. He promised this would be big. It has gotten a lot of people's attention. Let's go to Weijia Jiang at the White House. He called this a national emergency, Weijia. Can you put this into some kind of context for us?
Yeah, Maurice, so this was the president's very first event during his second term in the Rose Garden, which speaks to just how important this is to him. He had all the pomp and circumstance. He was surrounded by members of his cabinet. And of course, he brought in workers from the steel and automobile industry to make his case, Maurice, that this is going to be what he calls the golden age of America, because his theory is that if you tack on these tariffs to imports into America, well, companies here don't want to pay that. And so they are going to boost manufacturing. They're going to buy American and not want to pay the rates that you are seeing on your screen, Maurice. Now, what we did not know is exactly what countries would be impacted and the rate. And we know now that the administration used a formula to calculate what they are calling the total sum of all unfair trade practices. Now, that includes currency manipulation, tariff barriers, and of course, what these countries charge on American exports. So you can see here for China as the top example, 67%. Half of that is 34%, because President Trump says he wants to be, quote, kind to the world. So he is not going to impose the full 100% tit for tat, but 50% of that sum. And in addition to that, Maurice, it's important to note that what we were not expecting today was a 10% tariff on all countries. So whether, they are a part of this worst offenders group, as the administration calls, or not, there will be a 10% tariff. And of course, it's notable, I think, that he's making this announcement after the closing bell. We have been reporting for so many weeks, Maurice, about how the uncertainty of this has already rattled the stock market and certainly consumer confidence. So as we take all of this in, it'll be critical to watch the response, not only here, but globally.
Okay, Weijia Jiang at the White House, you are absolutely right. It is a big bet. And joining me now is Money Watch correspondent Kelly O'Grady. Kelly, we're getting reaction in after-hours trading. It's key to note that he did this after the markets closed at 4 o'clock. So what's the reaction you're seeing, and what are people going to have to deal with going forward?
Yeah, Weijia was very, very right to note that. So I was just looking at a couple of the companies that really rely on that global supply chain. So they are relying on countries like China and Taiwan. NVIDIA, right? Big AI stock.
Huge.
That's one of them. They get all their chips imports from Taiwan. So when you've got a 32% tariff being charged there, that is why the stock is down. Apple also, where do we get our iPhones from? China. Big tariff on that. And so that's why you're seeing the after hours trading go down. 3 takeaways that I want to give you. One is how investors are going to react going forward. Because, maybe this is just a little blip we're seeing in after hours trading. Maybe. But uncertainty has been the word of this quarter along with tariffs. And so we haven't heard from the president in his speech today that this is the end. He has sort of teased in the past, maybe pharmaceuticals, lumber. I think you might see more investor skittishness if there's
uncertainty. Right?
Yes, exactly. Also, you have companies that are probably going to have to invest billions of dollars in manufacturing here in the U.S. For investors, that's not a short-term good thing for the bottom line. There's undeniable benefits long-term, a global supply chain being here, more American jobs, but investors are worried about the short term. You also mentioned consumers.
The everyday person looking at this, oh my gosh.
Exactly. What's going on Main Street?
Thrown around all over the place.
Right.
What does it mean to everyday people?
Well, one, it's going to likely scare people, right? And we've already seen that in some of the consumer sentiment data that we've talked about, that people have cited anxiety about what tariffs could do to prices. You hear numbers like this, very curious to see reaction from consumers in those next surveys, how they're feeling about it. The real impact, though, is going to be in prices. If companies decide to pass that massive import tax on that they are paying, by the way, not the countries on, prices are going to go higher. And the final thing that I want to note is what happens to the economy, because let's pull this all together. And weirdly enough, I'm going to ask for a chart that our lovely control team just pulled up, because this shows how Wall Street sees the pains that Main Street could have. There are a couple of dates on here. We never saw the biggest drops on days where there were tariff announcements. We saw them on the days where there were consumer confidence that it was deteriorating or inflation was negative. And so when you put this all together, you could have a growth problem, and that's where investors and consumers are going to be watching.
One more quick point. He talks about how this is going to bring manufacturing back to the United States. Does that happen overnight?
It does not. It does not. It takes years. It takes billions of dollars.
This is a CBS News special report. I'm John Dickerson in New York, where the closing bell on Wall Street just rang. The markets closed down. The Dow slid roughly 1,600 points. The S&P 500 fell more than 4.5%. And the NASDAQ dropped nearly 6%. This comes just a day after President Trump announced his new tariff plan, which begins Saturday to charge at least 10% on imports from every country. The president also announced even higher reciprocal tariffs from 60 countries he calls, quote, the worst offenders. And that those are places that export more to the U.S. than the U.S. exports to them. Mr. Trump called the plan America's, quote, declaration of economic independence, but Americans could pay the price for these new charges. With me now is Money Watch correspondent Kelly O'Grady. Kelly, so what's just your broadest response to what the markets have done today?
Well, on a day like this, I always like to put it in perspective of how big of a loss this was. So you have to go back to 2020 for each of these 3 major indexes, the Dow, the S&P 500, and the NASDAQ, to see a single day that saw a greater loss. And so what does that mean? That was COVID.
Yeah.
Right? Investors are looking at today and sort of, at least in terms of how the market reacted, putting these two equal. Now, 3 reasons, I think, why there was so much of a sell-off. Investors really did not price in those reciprocal tariffs. It was not expected. We expected it to be a smaller amount of countries.
They guessed wrong.
They guessed wrong,
Right.
exactly.
This is a big, sweeping, massive move, whereas they thought, oh, he might tinker, he might do, but... Okay.
Exactly. And I mean, we had been talking about uncertainty for the longest time, and so it really plays into that. What they're also thinking is there's going to be the potential for higher prices, higher inflation, and maybe the consumer pulls back on spending. This was also not just Wall Street looking at how companies are going to do, but how Main Street is going to do, that the consumers are going to feel pain. And you sort of put that all together, and it could mean an economic slowdown. Now, investors might be wrong. There's, daily fluctuations, and long term, this could mean good news. But in the short term, investors bet that this was not going to be good news.
Right. Now, were there sectors that, well, let's talk about the NASDAQ and technology companies. A lot of them do their manufacturing outside of the United States. The theory behind the president's plan is that this is going to bring manufacturing back to the United States. But that doesn't happen overnight. these companies have to manage that.
No, it doesn't happen overnight, and it doesn't happen without billions and billions of dollars of investment. Tech was really hit hard. So the S&P 500, it lost $2 trillion, nearly $2 trillion in value. Nearly half of that came from 7 big tech stocks. And I highlight that because there's a couple of things when you think about tech and losses there. So Apple's a really good example. A lot of these companies, they have manufacturing in China. It's going to be really hard to bring that here, as you just mentioned, but it's also a big market for them. And China is likely to retaliate. And so that was what you saw flow through some of the tech stocks. But if you were looking at your 401k today, you probably also said, oh no. And that is because tech drives the S&P 500, as I just said, and a lot of your 401k is invested in funds that track the S&P 500.
I think investors best not look at their 401k on a day like this. Kelly, thank you. We're going to go to Nancy Cordes now at the White House. First, we're going to listen to the president, who spoke to reporters just an hour before the markets closed. And here's what President Trump had to say.
I think it's going very well. It was an operation, like when a patient gets operated on, and it's a big thing. I said this would exactly be the way it is. We have $6 or $7 trillion coming into our country, and we've never seen anything like it. The markets are going to boom, the stock is going to boom, the country is going to boom, and the rest of the world wants to see, is there any way they can make a deal? They've taken advantage of us for many, many years. For many years, we've been at the wrong side of the ball. And I'll tell you what, I think it's going to be unbelievable.
Let's turn now to Chief White House Correspondent Nancy Cordes. So, Nancy, that's a shortened version of what the president said yesterday in his much longer speech. What are you hearing from the White House here today? They did expect this, but then again, these are big numbers.
The message from the president and everyone on down today here at the White House, John, is that this is a blip, nothing to see here. The patient is going to be much better off after this operation. They simply do not accept what most economists around the world, even right-leaning economists, are saying about these tariffs, which is that they will raise unemployment and raise prices for Americans. And for the president specifically, John, at this point, after today's losses, the stock market has dropped by about 10% since he took office about 2.5 months ago. This is the kind of thing that he predicted would happen when he was on the campaign trail if Kamala Harris were to win. It's one of the worst starts for any president in the modern era.
Nancy Cordes at the White House. We're joined now by CBS News senior business and technology correspondent Jolene Kent. Jolene, you've been hearing from small businesses. What are you hearing? What do they think the future looks like?
So many small businesses feel this sense of anxiety and worry about the future. They've already, John, been struggling when it comes to persistent inflation, high interest rates to borrow money, say to build out your business, and the ongoing softening of consumer confidence, consumer sentiment overall. So that's what they're already facing, plus that uncertainty about tariffs. Now, as we look ahead, a lot of these small businesses, I'm hearing that they are going to be pulling back on orders. There's confusion about what the tariffs and how they were actually calculated will impact their ability to get supplies when it comes to basic textiles across the board. And what's really interesting is we already hear from small businesses across the board, according to the National Federation of Independent Businesses, for example, which is, by the way, often been quite bullish on the Trump administration's agenda. They have said in their recent survey, uncertainty is high and rising on Main Street, and confidence that the economy will continue to grow is fading. Now, remember, small businesses make up such a huge part of the labor market, of the economy, of GDP, of where people are spending their money. And so this uncertainty really feels different this time around. It feels like some of the promises from President Trump's campaign are really falling off, because now, with the market sliding and so much more prevailing anxiety for these small business owners, they feel like their back is up against a wall in a lot of ways. And this is interesting because it's hitting across, different retailers and suppliers and people who make all kinds of different things and do all kinds of different services, from retail to hospitality. we're feeling and hearing that the anxiety is real.
It's a great point, and the White House often makes the distinction between Wall Street and Main Street. They say Wall Street may have its own idiosyncrasies, but Main Street's where it's at. What you've just been describing is right in the center of Main Street, being felt both in Wall Street and Main Street. CBS's Ramy Inocencio joins me from London. Ramy, how are those allies responding to these trade actions?
Well, John, it has been a rough day, continues to be, and around the world, it's blanket frustration, confusion, and anger. And its presidents and its prime ministers from Europe to Asia huddling with their advisors and their business leaders, trying to really figure a way to make sure, basically, that their economies don't break. Here are some of those world leaders.
There seems to be no order in the disorder, no clear path through the complexity and chaos.
The administration's tariffs have no basis in logic, and they go against the basis of our two nations partnership.
Nobody wins in a trade war. That is not in our national interest.
French President Emmanuel Macron called Trump's tariffs a catastrophe. German Chancellor Olaf Scholz said that they're an attack on a system. He pointed out that America itself helped achieve post-World War II. Basically, to your question, John, no one outside the United States, that is saying that this is a good thing.
Well, and there's, as you know, plenty of disagreement here in the States. Ramy, okay, so they don't like it, but are they listening to the warnings that they should not respond, the warnings from the administration?
For the most part, yes, but for now, John. At this point, the most concrete pushback we're seeing is coming from Canada to the north. Prime Minister Mark Carney says that Ottawa will impose 25% tariffs on U.S.-made automobiles that right now don't comply with the U.S.-Mexico-Canada agreement, the USMCA. So that means vehicles that don't have at least 75% of its parts made in North America. But elsewhere in the world, there are threats, many threats of retaliation, but nothing concrete, like European Commission President Ursula von der Leyen saying that the EU is preparing countermeasures, but ultimately it looks like many are hoping to negotiate. The idea here, the fear here, John, is that if you retaliate, Trump might double, might even triple down on more tariffs.
That's right. Ramy Inocencio in London for us. Thank you so much. This is a CBS News special report. I'm John Dickerson in New York, where Wall Street took another dive today. The Dow fell roughly 2,200 points, about 5%. The Nasdaq dropped nearly 6%. Around 1,000 points, and the S&P 500 slid roughly 6% as well. The second day of the downward trend is, of course, fallout from President Trump's recently announced new tariffs. The 10% on imports from every country goes into effect tomorrow. China retaliated with 34% tariffs on all U.S. goods, igniting fears of a global trade war and potential recession. With me now is Money Watch correspondent Kelly O'Grady. Okay, Kelly, day two of this. How is day two different than day one, if the numbers are big?
It's worse.
Yeah.
In fact, it's significantly worse. So you mentioned that the Dow closed down over 2,000 points. That is the fourth time in history. Now, the Dow keeps going up over time, so 2,000 is not as significant a number this time around as maybe last time around.
But still rarefied territory. It doesn't happen that
rare.
much. Yeah.
A couple more stats for you. This is the worst two-day rout for stocks since March of 2020. Going back to the pandemic, we erased nearly 1 year of gains in the past few weeks in the market. And the Nasdaq is what we call bear market territory. That means when you have lost 20% of the value since its recent high. It entered that territory today. The S&P 500 is entering that territory. Just means investors are feeling very scared. All the sectors were down, and tech really took it on the chin, which we talked about yesterday.
Right.
It hurts your 401k.
That's right. And tech, because they both have component parts coming from overseas, and they have huge markets like Apple, 15 to 20% of their market in China. Speaking of China, what are you seeing in this response from China?
So China slapped 34% retaliatory tariffs on U.S. goods, and that's not going to make goods more expensive for us here. What that means, it's going to be more expensive for Chinese citizens to buy American goods. Think about the big companies, right? Apple, Nike, Tesla. But What really, I think, was reflected in investors today is they see that as China is determined to fight, and we are heading towards a global trade war. And where you get concerned about that is that's when consumers spend less, prices are higher, and you really saw that in the price of oil, because oil hit its lowest level since April 2021. And you're probably thinking, oh, well, my gas prices are
People are like, hey,
low.
that's
This
great.
is fantastic.
Yes, so explain why oil being low is not the good news one might think it would be.
Energy drives production. When you're manufacturing, when you have lots of activity and your economy is booming, you need oil. The fact that it went down is reflective that investors think we could be heading towards slowing economic growth, and you would need less oil because of less production.
Let me grab that for a second, which is that when you hear the administration talk about what's happening right now, they say, well, this is the market. It's not the real economy. They'll figure things out. What I hear you saying in oil, and correct me if I'm wrong, is businesses that use energy are making choices about what the future looks like. And that is affecting the oil market. And the bet that they're making about the future is that it's not going to be a roaring future full of a lot of economic activity, that it's going to be a less strong economic period. And that's why oil is, the bets are that there's going to be less energy used. So that's not just people trading in the market. That's real businesses making real choices about what the future looks like. Do I have that right?
Well, because oil is traded on a global market. You buy and you sell. So that's exactly right. And the reason is tariffs, because if prices are higher, businesses are going to buy less, people are going to buy less, and therefore you produce less.
Kelly O'Grady walking me through economics, for which I am grateful. We're going to turn now to White House correspondent Weijia Zhang, who is in Florida with the president. Weijia, what was the president up to today while the market took its second dip, and what did he say about it?
Well, John, just a few minutes ago, President Trump returned to his Mar-a-Lago resort after spending the day at his golf club. But he also spent the day very active on social media, trying to convince Americans of what he is saying. He's saying even though the markets are spiraling right now, ultimately they will boom. And he had some pretty direct messages. First, to the investors who might be spooked about pouring more money into the U.S. He said that my policies will never change, and this is a great time to get rich. He also criticized China for those retaliatory tariffs on American exports, saying that Beijing played this wrong. But the president also revealed that when he said he is ready to negotiate, he means it. He said he was on the phone today with the general secretary of the Communist Party of Vietnam, and he claims that that leader says Vietnam wants to bring the tariffs down to zero for American goods if they are able to strike a deal. And he said that the two countries will be in touch in the coming days. And then finally, President Trump had a direct message for the chairman of the Federal Reserve, Jerome Powell. This is not the first time he has sent this message, but he says to Powell that this is the time right now to cut interest rates. And he said it in all caps, John, which if you have seen any of Trump's posts, you know that's when he really wants to emphasize something, saying cut interest rates, Jerome, and stop playing politics. Now, recently in the Oval Office, I asked President Trump if he thought that the Fed should listen to him, and he said yes. John?
Well, that's so interesting, Weijia, because I believe Kevin Hassett, the top economic advisor to the president, said relatively recently that markets have benefited over history when central bankers are independent of the political forces. So that would put him at odds with the president, who is putting political pressure on Jerome Powell. Weijia, can I ask you a question about when the good times are going to roll here? If the White House says that these are the birthing pains, if you will, my expression, not theirs, between the past and the new global trade order that they've been talking about, when's that going to kick in where people can stop feeling the sense of nervousness that all our reporting says they're feeling?
Well, remember, John, just 2 days ago, we were talking about Liberation Day. And in Trump's mind, that is the U.S. being liberated from a reliance on foreign products, because we are going to enter a new golden age for American manufacturing. So the question is, when could American manufacturing really get up to speed where we are not relying on so many products from elsewhere? And it's interesting, John, because the White House has been pretty hesitant to attach any kind of time frame to that. But yesterday, President Trump said it would take about 1.5 years or 2 years for manufacturing to get up to speed. That is a long time when you're talking about people who want immediate relief from high prices.
And I mean, not to get basely political here, but of course there are off-year, non-presidential year elections at about that time frame too. So that will be an interesting confluence of events. Weijia Jiang, traveling with the president. Thank you. We were talking about the Federal Reserve Chair, Jerome Powell, and let's listen to what he said earlier today.
It is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent.
And we're joined now by CBS News senior business and technology correspondent Jolene Kent. Jolene, any reaction from you to what Chairman Powell there said? And I know you've been paying special attention to small businesses and how they're sorting all of this through. So what are you hearing from them?
Well, the remarks from Chair Powell are sobering. This is something that comes with a chair of the Federal Reserve who's very measured in his response to economic data, very careful about the political environment. So when you're a small business and you're hearing Chair Powell talk about these types of persistent inflation risks, that does not feel good. A lot of small businesses that we've been talking to have already told us, look, we survived the pandemic. We have been facing persistent inflation, and now we're basically, many feel that they're sandbagging ahead of what could be a flood of new challenges. So looking ahead, what can small businesses do? Well, a lot of them say they're going to hold off on hiring. That's likely to affect the labor market writ large. Of course, so many small businesses making up the fabric of our economy, right? You also may see a cut to profits. Orders get slowed down, growth also slowing down. And the issue here is that there's so much desire for certainty. The small businesses were hoping to get that from President Trump this week. They got the opposite, and they are not sure how bad it will get. So they're just bracing for any outcome and scenario.
It is shaping up to be another turbulent week as President Trump's trade war with the world escalates. The global sell-off triggered by President Trump's tariff announcements wiped out more than $6 trillion of wealth from the U.S. stock market in just 2 days. In a social media post yesterday, the president urged the country to hang tough. All this as tens of thousands of people took to the streets yesterday from Washington, D.C. to Minnesota and Columbus, Ohio, protesting many of Trump's policies, Elon Musk, and tariffs. We begin this morning with Commerce Secretary Howard Lutnick. Mr. Secretary, welcome to Face the Nation.
Great to be here.
We see about 60% of Americans have money in the stock market, which means that retirees could be just as concerned as hedge fund managers this morning. Did you expect this level of shock in the financial markets?
Well, you've got to realize this is a national security issue. I mean, we don't make medicine in this country anymore. We don't make ships. We don't have enough steel and aluminum to fight a battle, right? All our semiconductors are made overseas, so every button we press when we try to start our car or even use our microwave, these are all semiconductors. They're all made elsewhere. We've got to start to protect ourselves, and we've got to stop having all the countries of the world ripping us off. We have a $1.2 trillion trade deficit, and the rest of the world has a surplus with us. They're earning our money, they're taking our money, right. And Donald Trump has seen this, and he's going to stop it. So it is going to be a big change. Of course it's going to be a big change, but the rest of the world has been ripping us off for all these many years. Donald Trump has seen it, he's spoken about it,
I understand
and he's just
that.
not going to take it anymore, and that's his model.
And that was abundantly clear during the presidential campaign how much the president truly believes in tariffs and putting him at the center of his economic policy. But you saw absolute panic in the global markets. Did you expect that, or were you surprised?
No, I think the point is you need to reset the power of the United States of America and reset it against all our allies and our enemies alike. The idea that all the countries of the world can run trade surpluses with America and buy our things with us. Remember, $1.2 trillion. In 1980, we were a net investor, meaning we owned more of the rest of the world than they owned of us.
Yeah, it's a different world. It's a different market.
And now they own $18 trillion of us net. So that means the rest of the world, every year when we run a $1.2 trillion deficit, the rest of the world buys $1.2 trillion of America, and it goes up and up and up. And eventually, we're not going to own America, and we are going to be owned by the rest of the world. Imagine if we had a war and we can't build a ship, we can't fly a plane, we can't build our own planes, we don't have our own semiconductors. This is what the president is here to fix for America. It's in his hands, and he wants to fix America. This is his chance to fix America, and we need him to fix it for our children and our grandchildren.
Okay, but for businesses to do what you're doing, because what I hear you laying out there is a plan to reindustrialize the United States and to bring companies back to America. For a CEO to choose to invest.
Well said.
But for a CEO to make those decisions, you know this, they need certainty. They need to know if it costs them more to stay overseas or if it costs them more to move here. So can you give them clarity so that they don't just cut jobs because they're dealing with the cost of these tariffs? Can you tell them how long they're staying in place?
Absolutely. The United States of America is going to protect the people who invest in America. Trillions and trillions of dollars, you heard the president speak about it, are coming to invest in America. This is the economy of the world. We are the consumer of the world, and companies need to build it here, and we will protect them for building it here.
Okay,
we will help the American workers. Yes, American workers are more expensive, but they're better. We're going to protect all the factories that come to America, and that's what's coming here. So the president
is the 10% tariff
He's going to
permanent?
protect them. Well, remember, this is a national security issue.
I got it.
And
Is the 10%
he needs to address
tariff
our budget
permanent?
deficit. That, you know, the laws of America are the laws of America. He would like it to be that we need to protect the companies that invest here, and we are going to protect the companies that invest here. That is the policy of the United States of America. That's why trillions of dollars are coming here. The ripoff of the United States of America is over. All these companies are going to come and invest here. That's what they're doing. That's why they've committed trillions of dollars. They know this is the economy.
Mr. Secretary,
this is the place to go.
Mr. Secretary, the campaign's over. You won. So I'm asking what the plan is. So the Treasury Secretary said on another network, we're going to hold the course. It's not the kind of thing you can negotiate away in days or weeks. That makes it sound like the tariffs are staying in place at least for days or weeks. Is that correct, or is the president considering postponing implementation to negotiate?
There is no postponing. They are definitely going to stay in place for days and weeks. That is sort of obvious. The president needs to reset global trade. Everybody has a trade surplus, and we have a trade deficit. We are paying away our future and our lives. The countries of the world are ripping us off, and it's got to end. The president has made it crystal clear. This is the policy. We are going to protect the factories that come build in America. We are going to protect them. They're going to be successful. That's why they're going to build in America, the greatest economy in the earth. All of these companies are going to come and build here.
So when three of the president's other economic advisors who are on other networks today say that 50 different countries have been calling the White House to try to talk about the tariffs, what does that mean? Because that makes it sound like there is a negotiation, which is different from saying the tariffs are permanent.
Well, what it shows is that all these countries know that they've been ripping us off, and the day has come for that to end. Now, the problem is, it's not just tariffs. Like, I'll give you an example. Like, Vietnam said they'd like to be 0-0. Remember, Vietnam sends us $120 billion worth of goods every year.
Yes,
and
cheap
we send
manufacturing.
them about $12 billion. Wait, we send them $12 billion. So it's not the tariffs. It has nothing to do with tariffs. If they went to 0-0, they would go to $200 billion with us. We need to stop the ripoff, and 0-0 is the way
I
to
know,
make
but we
a
don't have
more
0-0,
of a
sir.
ripoff.
We don't have 0-0, actually, because when we saw the president stand in the Rose Garden holding up that chart that you helped make, that wasn't actually tariffs. That was actually confusing to investors because it was some kind of other formula, and the countries themselves seemed kind of random. Like, why are the Heard and McDonald Islands, which don't export to the United States and are quite literally inhabited by penguins, why do they face a 10% tariffs? Did you use AI to generate this?
No, the idea, look, the idea is
Why
that there
are they
no
on the
countries
list?
left off. Because the idea, what happens is, if you leave anything off the list, the countries that try to basically arbitrage America go through those countries to us. Any country, like we had tariffs, the president put tariffs on China, right, in 2018. And then what China started doing is they started going through other countries to America.
Right.
They just built through other countries through America. And so the president knows that. He's tired of it. And he's going to fix that. So basically, he said, look, I can't let any part of the world be a place where China or other countries can ship through them. So he ended those loopholes, these ridiculous loopholes. And now what he's trying to say is, I'm going to fix the trade deficit of the United States of America. It's a national security issue. We need to make medicine. We need to make semiconductors. We need to make ships. We need to have steel and aluminum. Come on. We need the greatness of America to actually be built in America. And he's tired of getting ripped off by the rest of the world.
Okay, but just to be clear, April 9th, the so-called retaliatory tariffs, the reciprocal tariffs, I should say, are those coming? Or are they open to negotiation?
The tariffs are coming. He announced it, and he wasn't kidding. The tariffs are coming. Of course they are.
Okay. Is the administration considering any kind of offset, any kind of subsidy? You mentioned the first administration, there was some bailout to farmers to help them deal with the pain from Chinese retaliation. Are you looking at that now?
Not that I have not participated in any meetings with respect to that. The country is focused on, you realize trillions of dollars of factories are going to be built in America. That's huge GDP. The factories being built in America are huge.
That takes
GDP.
years. And you've said that robots are going to fill those jobs. So those aren't union
it's really automated
jobs.
It's automated factories, but the key is who's going to build the factories, who's going to operate the factories, who's going to make them work. Great American workers. You know, we are going to replace
on other
the
networks.
armies of millions of people. Well, remember, the army of millions and millions of human beings screwing in little screws to make iPhones. That kind of thing is going to come to America. It's going to be automated, and great Americans, the trade craft of America, is going to fix them, is going to work on them. They're going to be mechanics. There's going to be HVAC specialists. There's going to be electricians. The trade craft of America are high school educated Americans. The core to our workforce is going to have the greatest resurgence of jobs in the history of America to work on these high-tech factories, which are all coming to America. That's what's going to build our next generation of America.
Are you concerned in the time it will take for a company to move to America that it will benefit China in the immediate term, that other markets will look to other suppliers instead of dealing with the United States?
That is ridiculous. The problem is everyone in the world sells to us. Our economy is the consumer of the world. We are the only one with a trade deficit. The rest of the world has a trade surplus. Why does Europe have a trade surplus? Is there something about Europe that's special? Seriously, are they a different world than we are? Why are they selling $200 billion a year?
Mr. Secretary.
More to us. It's because it's not fair. The rules are made not fair, and President Trump is going to fix them, and he's doing it for America, and he's doing it for your children and mine and our grandchildren. This is the moment that the United States of America takes hold of itself, and Donald Trump's been talking about this his whole life. This is Donald Trump's agenda, and we are all here to help him execute it.
And we will take him at his word quite literally. Thank you, Mr. Secretary, for your time this morning.